Hi and welcome to today's video. Today we'll take a look at one of the basic things that is required to be a successful trader, and that is to know how to basically buy stocks or options when the underlying is at a low price and then to sell at a higher price. This is a very basic concept, but most people get it wrong, and that is one of the primary reasons why they end up losing money in the markets. So, today we'll review and we'll understand the step by step process that needs to be followed in order to make sure that you're buying low and selling high so that your trades are profitable. Before we proceed, a quick look at the disclaimer. And now let's get into the details. So the very concept of understanding why people or traders end up losing money because they buy at a higher price and then they sell at a lower price is because of the way the trades are selected. And the very first thing that one needs to make sure in order to be a profitable trader is to make sure that you're buying something at a discount. If you're already buying something which is at elevated prices, then it's already selling at a premium, right? If you go in and buy something which is already at a higher price, then in order to make a profit, you need it to go even higher. And that is not the way markets work. If you look at any stock or the price of any product, uh, not just in the stock market, but in any other regular commodity markets also, the prices don't just shoot up in a straight line and continue going up. They basically gradually go up, and the prices will go up and down. So the main thing that has to be understood is if we are getting into a trading position when the underlying stock is already trading at a premium, then we are getting into a situation where we are at a disadvantage from the beginning itself. And that is something we want to avoid at all costs. So, the first thing that we need to make sure is to basically identify stocks on sale. Now, what do I mean by stocks on sale? So, as I said, stocks don't move up or down in a straight line. There are always, when a stock is going up, it will always undergo corrections, which are temporary downward movements when the stock price is either correcting or it's consolidating. So, these are the points that we need to identify, and basically, these are the points at which we need to get into those positions. So let's take the example of a stock which has just had a very nice rally. In the last 10 days or so, it's gone up by 20-25%. Is it the right time for somebody to go and buy the stock? So for that, you need to understand that because the stock is up 25%, there has to be some catalyst. But chances are that whatever that catalyst was, maybe a good earnings report, maybe a new product, maybe some analyst gave a good review or a good recommendation, and the targets were increased by one of the famous analysts. So there can be different reasons why the price of stock is going up. But the important thing to understand is whatever that catalyst is already driven up the price by 25%. So if the price is already up by 25%, is it a good buy anymore? Because it's easy to see that the stock is now already trading at a premium. Now, I'm not saying that the stock cannot continue going higher and cannot go from 125 to 150 to 175 to 200. Let's say it was trading at 100, it went to 125 already. There are chances that it can always continue going up. But then that is where we are just expecting or hoping something to happen, which may actually not happen. However, if the way we select the stocks, we change our approach, and instead of looking for stocks that are already up 20-30% and then getting in, if we look for stocks which, let's say, had a high of 125 $130, and now they are down 25-30% to $100, I would say these are stocks which have shown that they can go to 125 130 price levels, but today for some reason they are trading at a discount. So this is the time when we go in, because now we are looking at a situation where a stock has already shown that it can go much higher than the current price, but we are still able to get into a trading position in this particular stock at a reduced price. And that is what identifying stocks on sale is all about. I have a complete video which gives the detailed step by step process to find out the stocks on sale. We will have a quick look at how I use that procedure to identify these stocks. But if you want to check it out in more detail, I have a complete detailed step by step video where I basically show how to identify these stocks on sale. So let's go over to the Finviz platform, and we'll try to see um, some of the stocks which may or may not be, and I don't know how many stocks will come up, but we'll try to identify stocks which are selling at a sale. So this is the Finviz platform that I was mentioning earlier. And we are going to basically use the stock screener that is available here to find the stocks that are available on sale or are trading at a discount right now. So you can go to the screener here, and now once the screener is all loaded here, we can basically go to the all tab so that I can see all the possible filters that I can set in one go. And so I'm going to set a couple of options here. If you want to understand in detail why I'm setting up these options, you can basically go through the detailed video where I'm giving step-by-step explanation of how I use this screener to find out stocks on sale. But I'm going to quickly do the settings here to see what stocks are trading on sale right now. So we'll select stocks only from companies which are listed in the US, and we are going to be looking at stocks which have enough liquidity. We also want to be looking at stocks which have corresponding options available for trading, and we want the target price to be above the current price. We want the analyst rating to be buy or better, and we want the RSI to be oversold, and we also want to uh, take out companies with very small market capitalizations. We don't want to consider those. And finally, I want to see stocks which are trading close to their support levels. So I'm getting four symbols here. And so let's open the charts for each four of these to quickly see what we are looking at. So here's the concept. Now you can see here that all these four charts, if you see, the stock has recently made a downward move. So you can see the first one, AVLR, has come down, AYX is down, BAND is down, and CRSR is also down. So this is basically what I'm talking about. Uh, we could have, now let's consider this first chart. Let me open it in another tab so that we can look at it in detail. So let's understand this particular chart and what exactly the concept that I'm trying to drive across. So if we consider the price movement from here till all the way till here, the stock was in a pretty good uptrend. So this is a kind of a sidewards consolidation, and then the stock started going up. It's been going up, and it reached the one around the 180, $185 levels at its peak. So if you are looking to get into this stock because it's made a new high, and let's say somebody who got in at $185 or $180, for that person, in order to make a profit, the stock needs to go even higher. So the stock has already gone high, but you need it to go higher in order to make a profit, and that's usually not going to happen because, as I said, most of the stocks will not continue going up in a straight line. Now see, this is a pretty strong upward movement, but after that what we see is consolidation till here, and then now we are seeing a downtrend. So the stock is going down. Now, as far as the analysts are concerned, I did select that option, so they are still giving it a strong buy rating or a buy rating, and the target price is above this price. So the concept I want to drive across is that for somebody who's getting in at the 180, 185 levels, it is very difficult or has a lesser chance of making a profit on this particular trade rather than a person who's waiting for this pullback. So now we have a pretty strong pullback, and you can see there was a red candle here. Now this level here is kind of a support. Okay, this is kind of a support. the support is kind of breached, but supports are not exact lines, okay, they're levels. So this is a pretty strong support. Why am I saying this level of 140 is a pretty strong support? Because you see here, at one time this was a resistance, and there are multiple points to show that this was a pretty strong resistance. We had one, two, and third uh, uh, touch to this resistance level, and the stock wasn't able to go higher. Finally, it broke through, and then since then, this has been a pretty strong support. So we've already had one time that this level acted as a support. Then we have a second move where this acted as support, and now the third time, it's not the exact support, but you can see that this strong downward move has been arrested here to a certain extent. So now here, if I see a red candle followed by a green candle, and the next day, if I see a push going above the 140 level, what that is basically going to tell me is that this was a false breakout, and a false breakout makes this an even stronger support level, because this is a support level which the bears tried to breach. But end of the day, if this goes back up above 140, then we can be certain that in spite of all the downward pressure that the bears could put in, they were still not able to move the price down, and it's come back up. So this is definitely a pretty strong support level, and this would be a much better entry point to get into a trade with this symbol AVLR, rather than getting into a trade right at the peak here or here or here. Why? Because in all these cases, the stock has already made a significant upward move. And if you're just hoping or expecting the stock to even go higher, then we are not trading based on what the market is telling us. And the markets always tell us that whenever there is an upward move, there has to be a correction. Whenever there is an upward move, there has to be a consolidation, there has to be a correction. And we do not want to get into positions when the stock is probably at its peak. Now, if you consider this upward move, we can't be certain that this big green bar was the end of the upward move. It did continue till here. But then we cannot also be sure that this was the peak and the stock would have come down straight from here. But what we do need know with much more certainty is that after this kind of a downward move, for a stock which is touching its support levels, which is barely breaching a very strong support, if it comes back and backed by the fact that the analysts are still giving it a buy or a strong buy rating, where the analysts are still putting a price target which is way higher than the current price. Let's look at what's the target price. So, target price right now, the average target price is $209. The stock is trading at $135. So, it's got a pretty significant upward possibility as per the analysts. And so this is one way. I'm not saying this is something that I would go and buy. I'll obviously do more research around this, but then this is one of the candidates which I would consider taking a position in, simply based on the price movement that has recently happened. I would obviously want to be certain that this downward move is not because of a catalyst which is going to continue with this company for a long time. I don't want to be looking at any events which can cause the stock to go into bankruptcy or indicate some kind of a malpractice at this company. So that is something which is additional research which needs to be done. But technically, looking at the charts, uh, for me, this is a much better uh, entry point. If the stock goes above 140, back above 140, it would be a good entry point because it's got a buy or a strong buy rating. It's got a price targets which is pretty high. It's trading very close to a very strong support level. So chances are technically that the stock is going to go up, and it's got good volumes. It's got related options as well, and therefore for me, getting in at this 140 price is a much better option than getting in up here close to the 180 levels. So if somebody is getting into this position at 180 levels, they are at an inherent disadvantage, because you're already buying something at a premium and then you're expecting it to go even higher to make you a profit. Whereas I would suggest, or this is basically what I would prefer to do, is to get in at around the 140 levels. And so I know, okay, even if the stock doesn't make a new high, it just manages to barely go up to its previous highs or not even reach there, I still have a lot of scope to make profit. And even if the stock goes down, for people who are not comfortable getting in here, you can look at the next big support, which is here. So you can see one, two, three. We do have a strong support at around the 115 level. So if you want to take even more conservative approach, you can wait for this to come down to the 115 levels, and that definitely would make this a very good candidate, because as long as the company fundamentals are good, as long as there is no significant negative catalyst around this firm, buying or getting into a position in this stock at $115 is going to be something which is a big discount. I mean, it's traded at 180 bucks. You're buying or getting into something which has reached a 180 level but has no significant change in its fundamentals or its mode of operations, and you're able to get in at $115. That, as far as I'm concerned, is a big discount, and chances of you uh, converting that position into a profitable one or a profitable trade are really high. So I'll leave the detailed step-by-step video that I have on identifying the stocks on sale. I'll leave the link for that in the description. And if you have any suggestions, please leave them down in the comments. Please subscribe to the channel if you've not already done so, and share it with your friends and family. And if you have any questions, any comments, they're most welcome. And I'll see you in the next video. Thank you.